Hey guys, this week you got me in my footy gear. Sorry I haven't had a chance to get changed yet. We won, which is pretty cool. An old fella, 50-year-old, running around the football field. I'm already injured, one game in. Look, the market at the moment, housing market's obviously quite weak. As we've talked about before, I was expecting to get a lot of listings coming in. There'd been a lot of people sort of sitting on the fence the last couple of years, not selling but wanting to sell. They were always coming back into the market this year. We've got a lot of stock coming onto the market. There's still not a lot of buyers out there. Buyers are sort of struggling to meet vendor expectations with these high interest rates. They're just not able to borrow perhaps what they could have borrowed before. They've seen some softness in the housing market. House prices were obviously down a little bit in March. They're obviously down about 20% from their peak, and if you put inflation in the mix, they're down about 35%. So I'm not expecting to see a big fall in house prices from here. I'm expecting it to stay reasonably steady but quiet. You're just going to have a whole lot of people sitting on the fence. There's buyers. There are a lot of people out there that want to buy, but they're in no rush to buy in this market. Equally, we've got a lot of vendors, people willing to sell. Some will be more desperate than others. Some will sell into this market and be prepared to take a hit on price. Some will simply take their property off the market and decide to wait another year. That generally just freezes the market up. We don't see a lot of activity, but equally we won't see a big reduction in house prices. The caveat on that will be if the unemployment rate goes up and if that puts a bit more pressure on vendors to sell, then we could see a bit more of a price reduction from here. As far as the economy is concerned, it's pretty weak out there. We had higher than expected non-tradable inflation. You'll see our view all over our website, and we're quite public about it. Our view is that the economy's in a pretty deep recession. You guys out there will be feeling it. You'll be seeing evidence of it every day. We think that will flow through into the numbers over the next couple of quarters. To an extent that I think interest rate reductions will be back on the table. I'm expecting them towards the end of this year, but worst case scenario, the banks and the RBNZ are talking about next year, right? So if you were fixing at the moment, fixing for a year is going to get you through that current uncertainty and more definitively into an environment where interest rates are starting to fall. It's tough out there. One of the things that you can look at in terms of freeing up some cash flow is refinancing. If you've been with your existing bank for over 3 years, then you'll have no clawback on any cash back that you've been given previously, and you'll have the opportunity to get a cash back in this market. So, as long as you still don't have some of those cheap rates, which mean that refinancing is expensive, refinancing is a good option to get some cash in your back pocket, restructure your loan, maybe reduce your repayments down a bit and just make it a bit easier over the next 12 months.